Hello and welcome to Peer-to-Peer Trades. My name is JT, and here on the channel we focus on the biggest moves in crypto. So if you're new here, I want to invite you to subscribe and follow along. If you're following on Twitch, we only focus on the biggest macro shifts in the market. So yeah, let's take a look at Bitcoin. I want to take a look at Ethereum and just take a look at the market health overall, some of the indexes, and how it is comparing to what we're seeing in crypto. So without any further ado, let's go ahead and take a look at the king of all crypto, and that is Bitcoin. All right, so we're starting out here on the daily chart, just kind of getting a market structure um, picture here. So we were in this accumulation range down here, and we were in this range for several months. Let's just take a quick little measurement here. This was about nearly a year, actually. Well, 100 days short of a year, 269 days. So a good amount of time in this accumulation range. And then we broke out above it, and now we have this area as support. What was then resistance is now support. So this general area right here is now acting as our support level. So things look generally good. We are making higher highs and higher lows in the price of Bitcoin here. The local range is quite choppy. A lot of people are joining into the rally a little bit too late. Um, nothing, no volume. I have no volume. Can I get a mic check? Um, we're joining in a little bit too late, and we do have a lot of people selling at these levels. If you were following along on Alpha Numerics or just following us on the channel, we were long at around 18K right as had to restart the stream. Okay, well, let me know if anything changes. So we're wanting to hold above this level. This local range, we're seeing characteristics of distribution. So I think we get a little bit of a shakeout. I think we get a little bit of a market scare. Um, a lot of people are still, the bears are still calling for 12K. And the bulls are just not able to make new highs. So it's a pretty interesting level. Let me turn off alphanumerics and let's just zoom in here. And you can see what I'm talking about as far as a Wyckoff distribution. Now, for those who are unfamiliar with Wyckoff, let me actually just pull up a distribution. Let's get that out of the way. But you can see a few key characteristics here. We have our trading range, our sideways trading range. Now, to really simplify the difference between a accumulation and a distribution, accumulations are usually showing a decline in volatility where you get a squeeze of price, and then eventually you get a break and a uptrend outside of the consolidation. This is not what we're seeing here. We're seeing a breakout, a rejection that makes a new low inside of the consolidation, by the way. It goes beyond the order block. Then we had another attempted breakout that was met with a rejection. Another breakout met with a rejection. Now we were trading underneath this area at the lows, and it looked like we were going to reclaim some of the highs, overtake some of this resistance. And we got above for a few days. The market got really, really excited, and now we're right back down to the lows. So the area to really watch out for right now is this 25K level. If we take out the lows at 25.8, I think that's going to be kind of the impulse to the downside. So looking at this from the 4-hour chart, let me go ahead and remove that distribution. Now 4-hour, if we're talking about the biggest moves in crypto, these bull market, bear market, secular moves, don't pay too much attention to the 4-hour. Don't pay too much attention to the daily, really. But what we can see here in the local range for those who have been sidelined or wanting to pick some up is I am leaning to the bearish side of things on this. I think that there's a possibility, a rather high probability even, that we can take out these 25.8 lows. And if we do that, I think it's going to impulse to the downside. Now, how far it goes, I don't really care how far. What I'm more interested in is just what are the conditions. So right now, let's go over to the 3-day chart. And alphanumerics has been red, by the way. So that's a signal to exit positions. We've been out. We went in at 18K, got out at 27, went in when the wave turned green, went out when the wave turned red. We are now red. We also have a bearish cross here. Let me turn off price for just a moment. You can see the blue 7 has crossed below the 30. So we have a bearish cross, bearish momentum. I would like to see us revisit the lows here in the RSI, kind of get a reset, something like this back here where we got to 29, below 29, 24, something like that. And that would bring a lot of panic into the market. You would have a lot of bears calling for very, very low levels. I don't want to focus too much on the price targets, because I'm not interested in the price targets. I'm interested in the momentum and market conditions. I want to see just that capitulatory move. I want to see people panic. I want to see some panic selling. And once that panic selling takes place, that's where I'll be looking to, deploy and enter back at least 50% of the position back to the long side. So what that would look like is, the RSI on the higher time frames, at least below 30. Could be a falling wedge, but only with one eye closed, few drinks, and a lot of creativity. Yeah, I mean, it could be a falling wedge, but it's a very choppy range. But you always have to put your biases aside, and that's why you have to have a plan for upside. So much like, a lot of people think that technical analysis is some sort of crystal ball that allows you to predict the future. And it's not. It's a way for you to develop a bias and then plan for that bias. So I think that we're going to head down, so I can execute trades that think that I'm going to go down. I can take a cash position. Now, if I needed to bail on that, if it's going to head up, then I need to have a plan for if it heads up, because the last thing you want to do is just be sidelined in cash as the bull market starts to take off. So you need to have an upside plan as well. And with alphanumerics, it's really easy. As soon as the wave turns green again, it's go. So that'll happen at around 30,700, which, that's going to be up against a resistance. If we get up to that level, we're looking up here where you buy again. So, you're buying into resistance. Not advisable if you're trading a range, but I think that if we start to take out some of these highs here at around 30K is a big psychological level. I think if we break 30K again, there will be some momentum. But I would like to see, and I think we will see, a downside move first before we start trending back up. So that's my plan. That's my downside plan. That is my upside plan. And if anything changes, then I'll, try and hop on here and keep you guys informed. But yeah, so let's switch gears here a little bit. So that's Bitcoin. Think it's going to go down, but if it goes past 30, I'll jump back in. Let's take a look at the DXY, the dollar. So we're range bound here. And as it stands right now, this is technically a descending triangle. You have higher lows on top and equal lows on the bottom, which is good. That's what you want to see. You want to see if you're in risk on assets, you want to see the dollar go down. And we are seeing the dollar go down currently. But what we're not seeing is a real outperformance in the crypto sector. We're seeing a lot of momentum and volume and confidence going into the traditional markets. So this is the NASDAQ right here. The NASDAQ has been on a rally. We broke past some really critical resistance here at around 13.1, and we're now up at 14.4. With the next kind of major resistance range is up here. We're kind of getting close to it. This is our current resistance. So maybe we get a rejection and retest, but I think we did a lot of consolidation at this level, so we don't necessarily need to do that. But what this is telling me, the more important thing here, is that there's no volume in crypto. There's no confidence in crypto. And the sentiment matches that as well. When you talk to people who aren't, invested in cryptocurrency or, you know, just those crypto tourists, they want nothing to do with it. Absolutely nothing to do with this sector, and it's because it hasn't performed. Now, the comparative analysis here is we're seeing a lot more money flow into equities. And we can see that here on the S&P as well. The S&P is at a pretty interesting level. Let me turn off alphanumerics. It's not great on the indexes. Let's go to the chart. And again, we're past this key resistance right here. Or we're up against a key resistance right here. With a pretty nice demand tail on this latest weekly candle. So we've definitely got momentum. We've got upside momentum here in the S&P. So confidence is returning to the market. And as confidence returns, you get this trickle down effect where, the lowest risk stuff starts to move, and then medium risk, and then high risk, and then, Bitcoin, and then subsequently cryptocurrency after that. But yeah, I want to make it clear that from what I'm seeing, the volume is not in Bitcoin. The volume in the trading activity is not in Bitcoin. And therefore, it's not in altcoins either. So that is all the time I have for today. If you enjoyed this content, please leave it a like. Don't forget to subscribe. And until next time, please trade safe. It is a jungle out there. Peace.